Hi, I'm Lisa Rhodes, Managing Director of Easton Global Fund 4. Easton has been in the venture business since 1999, and we are raising our fourth fund. Our first fund was invested in a combination of healthcare, biotechnology, devices, and we have a very strong track record of success on that. At least 5 of those companies have become worth $1 billion in valuation upon our exit. Our second fund is a 2006-2007 vintage, and we've had very strong track record as well, with at least another 1 or 2 companies in that $1 billion range, and we're still looking to exit for value. The last fund, which is a combination of 2 smaller funds, is really actually a 2011 and 2013 vintage, where we've actually increased valuation significantly and are on a very strong trajectory for very strong returns. At Easton, we believe in partnerships are really critical throughout the entire investment process. We start with partnering with LSN on the deal flow process, and then we take that through to partnerships for our exit. Our potential for early exits is really the ability to partner with these companies to develop these relationships on our exit strategies, and we look at partnering for not only on the identification of deals, as well as funding deals and throughout the syndication process for that. We also look at partnerships to help us do further development of these programs. So at Easton, we believe that investing in management teams is critical for the success of a portfolio company. In terms of when we look at a technology, we not only look at the technology, but we look at the strength of the management team. Is the team able to carry that idea through to a commercial strategy? Is that team strong enough, yet also nimble enough to create value and learn to say that I'm saying that there are changes in the marketplace based on data? So we look at teams with strength, with vision, and the ability to actually work within broader ecosystems to leverage the data that's coming their way and be able to create the value that's inherent in a technology. At Easton, we are really strong advocates of strong management teams. We know that technology is a key driver and we invest in that, but if we don't have a strong management team to lead us into the development and commercialization, we know that it's not going to become a very successful company. So we look for management team members who have vision, who have strength, and are also flexible enough to focus in on the data that's coming in and to be able to change and pivot when it's necessary. At Easton, we have a slightly different perspective than the traditional milestone investing, where we look at inflection points that create true value that is validated by third parties, that you can really make a huge difference in the technology. For us, we'll be able to invest in an earlier stage of a portfolio company because we can see the value inflection points at earlier points. We call this investing between the lines. So if you look at the difference between the milestones and the value inflection points, you can see the differences between the biotechnology, medical devices and diagnostics, and also into digital health. Biotechnology, it's clear that we're looking for some biomarker that's actually going to tell us that there's some proof of efficacy in man. That's critical. On the diagnostic, device, and the digital technology side, we're looking for some kind of commercial traction and the ability to adopt and fundamentally change a process. And that's kind of what we see in this value inflection point. Easton Global Fund 4 is combining the best of both venture capital and private equity. We're looking for venture returns and a private equity timeline and business model where we were actively investing in highly innovative companies to create supreme value.